By popular demand, ladies and gentlemen, everyone keeps asking me about the MJ stocks, and considering I have made over $20,000 in the sector and also being a Canadian, I figured I could humbly offer some insight to you folks. And we're going to be analyzing three companies today. We're going to be talking about Aurora, which is the most popular, ticker symbol ACB. We got Aphria, ticker symbol APHA, and then finally the largest of the bunch, Canopy Growth Corp, ticker WEED. This is the one that actually made me over $20,000. Though I have no exposure today, I'm honestly thinking about dipping my toes in to one of these companies, which I'll share with you at the end of the video here, folks, because I think there's going to be a bit of a turnaround this year in this market. Now, nonetheless, I am going to be tiptoeing around the YouTube algorithm today because they do not like when you talk about this stuff. So in light of trying to avoid getting suppressed and demonetized, I simply ask that you slap that like button, or heck, hit the dislike button, because it helps the channel either way. But nonetheless, let's jump. Welcome back. Income investors alike to a very confusing sector of the market that I think is honestly going to turn around. And we're going to kick this off by talking about Aurora, which currently sits at just under a $2 billion market cap. And anybody that has bought into it over the last year is just getting absolutely slaughtered. Actually, it's so bad right now that this company almost got delisted and they had to do a reverse stock split, minimizing the shares they had on the market to increase the share value. Because typically if stocks, I think, drop below 10 or $5, they will get delisted after a few months. And you can see that stock split happen right here in the last 6 months when it looked like the stock jumped up massively, but you wouldn't have actually been up 140%. This was just a reverse split, minimizing shares, increasing the shares you have in value. And since that split happened, it has only been downhill ever since. To kick all of this off, let's just get into the website and then some of the deeper fundamentals really quick here, folks. So here is Aurora's website, and what I'm going to advocate that you remember the most, because this is going to be your homework that I'll explain more at the end of the video, you need to be aware of the two classes of MJ products they have on the market, because they have one for medical licenses, which I would presume are a lot stronger products, and then they have their basically public available on the government websites that you can order as just being a Canadian citizen. These are all of their medical brands, and if we scroll down here are their consumer brands. And like I said, don't forget these because we're going to come back to this in a little bit. But taking a look at some of their books here, folks, I'm not going to go through their entire balance sheet, but if there's one thing I want you to recognize, one of my favorite analysis fundamentals is minusing the total assets from the liabilities, but you can't really do that with these stocks because most of their assets is in shareholder cash that they don't know what to do with, and they have been burning baby like crazy as of late. And to give you an idea, here's Aurora. We can see they have a total asset value of $5.5 billion and only a total liability of $1.1 billion. And you think that would be incredible until you look at the capital they are currently burning through. As of 2019, they did $247 million in revenue, but burnt through $290 million. Not something I enjoy seeing in a company. And the craziest thing is, considering in the first quarter the entire economy went on lockdown, people were anticipating some higher demand for MJ products because people would be ordering them online. Now, somehow Aurora missed estimates by a landslide. The estimate expectation was minus 76 cents and they lost $1.37. So big difference on what analysts were expecting with this company. And actually, if we go deep into their books, I'm not going to get too much in the revenue. You guys can look through this. The only thing that I want you to pay attention to if you're interested in this market is their general expenses, because this is where I get really confused. And in one particular area here, folks, when we're talking about sales and marketing, considering these companies aren't legally allowed to advertise to the market, not like beer companies, you cannot put ads for this stuff on TV. I am rather shocked here that they spent $22 million in 2019 on sales and marketing. Where did that go? I mean, I honestly get a little worried because when, these companies that are growing, and you'll see this in the SPACs, in the penny stocks, any companies that are trying to get a foothold in a market and get off the ground need a stupid amount of capital. And when they end up getting billions of dollars, like the MJ markets did, they get loosey-goosey with how they're spending it. And you might recall back in 2018 when the hype really took off for this market, everybody was focused focusing on expanding, like Canopy, Aurora. They were all just buying acquisitions here and there. Take that, take this. They were massively expanding until all of a sudden they realized there was no revenue. And then they had to start consolidating, and they were selling off projects, liquidating this, which was, it was just a complete nightmare here, folks. So I would be really curious to understand exactly how their expenses, considering their general and administration, was $60 million. And you can see their net revenue was only $75 million. Now, as kind of an accounting nerd here, and I love math, I would sit down and slap somebody if they thought they had to spend $22 million on sales and marketing. I'm just saying, considering the revenue they spat out, totally not justifiable here, folks. Now let's take a look at Aphria. Now this one, not so bad in my opinion. It's doing okay. Also not profitable, sitting at $1.83 billion here. And of course, if you're holding these, you're more than likely down on them. But this one has actually been holding up generally okay. Taking a look, I love their website because they immediately introduced me pretty much to their products. Now, if you're really doing your due diligence here, folks, you're going to have to learn all of these products, including Aurora's, and you're going to have to take them and compare them to how they're selling on the actual government websites and the funnels that they're being released through, because whatever one's selling the most is going to be the winner at the end of this game. And when it comes to MJ products, usually stoners stick to one or two brands and that they find something they like. Considering Aphria's got some really great popular products in the vape sector, it's going to be really interesting, especially to see these second quarter earnings. But let's just take a look. And again, guys, if you want to see the total assets versus liabilities, just because it doesn't make sense on growing companies, here's $2.4 billion in underlying assets and only $708 million in liabilities. And the most incredible thing here, guys, is take a look at this revenue. Again, $237 million, very comparable to Aurora, but the only difference is they only had $16 million in losses. Now, though that sucks, I mean, in comparison, there's like night and day here, considering they've had explosive growth. And if this is something that continues forward, which it highly looks like it is, because if we take a look at their first quarter earnings here, we can actually see they smashed it out by 0.02 cents. And considering they were expected to have a loss of 4 cents, that's a difference of 6 cents per share. So, I mean, there's some good highlighted information right here that's going to lead to some interesting stuff coming up on Q2 earnings. But let's get down deeper into this just to show you guys some comparisons here. I really don't like the financial reports because as of right now, they're not that accurate. Because in fact, if we go into fiscal 2020 and we click on Q1, this really annoys me, folks, because I want to see Q1, their 2020 information. If we open up their financial statement, which I already have opened up, you'll see they're only providing me with the 2019 information. It's honestly really pissing me off because how can you show me 2019 information when this says it's supposed to be fiscal 2020 Q1? Like, I don't understand the lineup here and how they're releasing this information. So nonetheless, folks, we're really only looking at the 2019 information. And I don't know who's doing this website stuff, but I need to find Q1 of their quarterly income, which is something I'm going to dig for and try and figure out why it's not listed under the right tabs. But nonetheless, folks, let's just take a look and show you a comparison over Aurora versus Aphria here. Now, taking a look at Aphria's selling, marketing, and promotion compared to Aurora, they only did $7.8 million. So try and explain to me what Aphria is doing that's so different over Aurora. Because again, guys, sales and marketing, $22 million. That's so drastically different over all these other companies, and it really scares me on how they're spending their capital here, folks. But getting back into this, guys, you can kind of go through their expenses. I think Aphria has one of the better balance sheets, which we're going to start realizing as we move forward, as we can take a look at their net revenue of $126 million. All this stuff we generally saw on that Yahoo Finance chart, because again, this isn't the fiscal first quarter of 2020. Don't know why, but nonetheless, folks, taking a look at Canopy Growth Corp here, the largest in the industry, the one that everyone was the most hyped about, had the largest market share, is arguably one of the worst performers right now, especially on their balance sheets. What we're going to take a look at, as you may recall, Constellation Brands pretty much owns the majority of this company at this point, as they fired the old CEO because they blamed all the loss of revenue on him. And by the way, the CEO, Bruce Linton, I'm a real big fan of the dude. He's currently on board with a company called MindMed, which I'm not going to get into in this video, but if you're OG to the channel, you know what I'm talking about, right? I love that Bruce Linton because he was the reason I made all of this money off this company. And I think as a CEO, he has been far too underrated. I'm really glad MindMed picked him up, because this was a guy that built a huge, like, $30 billion company in its height. But nonetheless, folks, taking a look at some of their brands. Again, this is going to be important in a sec here. here, we can see all of the different ones. I like Tweed the most because this one's actually really close to where I live. And going into their earnings, this is where things get a little scary, considering we can see they have a total assets of $6.8 billion, making them the largest in the sector. But again, guys, has a lot to do with cash and cash equivalents. And then we can take a look at the total liabilities being $1.7 billion, same as everyone else. This is why Bruce Linton got fired, because for some reason, Canopy, being the largest company, Yahoo Finance decides to update their information a little more accurately. And we can see going into 2020 here, folks, that they made $398 million in revenue, one of the largest revenue generators, but lost $1.3 billion here, folks. And this has everything to do with scaling too fast. And as I told you guys, the government really screwed their funnel up, and I'm going to touch base on that in a second. And I don't think any of this revenue loss had anything to do with Bruce Linton. We'll talk about that in a sec here, folks. But let's just take a look at some of the reports here, because we can see that they actually show me their 2020 information, and their net loss going into 2020 was $1.3 billion compared to 2019 when they only lost $712 million. I'm not going to go over this balance sheet because this stuff is just utterly terrifying in my opinion. So, I mean, you can take some time with this balance sheet, but I hate Canopy Growth Corp. As Warren Buffett says, when I'm trying to learn about a company, I'd like to see it all on a minimum of 10 pages. And within 5 to 10 pages, I should have a really good grasp of what that company's doing. But if we take a look at Canopy here, folks, they made their annual report, or their fiscal Q1 2020 report, a 1,227 page PDF. Are you crazy? Who's going to read this? I mean, I'm not going to sit here. This could take days to go through it, let alone the accounting firm that had to write all of this out. But the neat thing is Canopy just came out with drinks. And like I told you guys, the reason I kept telling you to focus on those brands is you need to do some brand homework. You need to go on the street, and you're going to have to figure out what are the most popular products. And if I go on to the OCS, the Ontario word that I can't say due to the YouTube algorithm store, we can see, we go under beverages, the only beverages sold right now, the top sellers are by Tweed. So that's a very good sign, considering this is something Constellation Brands wanted to get into. The problem I have is the premium for these products are insanely expensive at almost $4 a can, costing a heck of a lot more than beer, which is unfortunate because usually it's the cheaper products that sell the best. Now, years ago, when I was getting out of this market because it just got out of control due to no revenues, which again, guys, when you're getting into speculative plays, whether we're talking SPACs like Nikola, whether you're talking all these penny stocks or these cure stocks like Moderna, Vertex, the CB cure stocks, again, being careful with my words here, folks, those are companies that are all hype-based. They make zero revenue, and their futures are already priced into the companies. That is something I'm seeing very currently, and a lot of people are going to get burned if they're long-term investors in those kind of companies. And I could recognize that with something like these MJ stocks, guys, which is really funny because, I mean, if you look at, say, Canopy Growth Corp and compare this chart to any of those hype plays like Nikola, you're starting to notice some really similar patterns there, folks. But the reason I think there's going to be a turnaround now in the MJ markets is because the government has finally fixed their funnel. As you recall, when they first introduced this, their prices were more expensive than the black market. They were only selling basically the actual bud, not like all these vapes, not these edibles. I mean, that was 2.0, which didn't come until basically 2019. And the fact that people were still buying from black market dealers led to some uncertainty around the market. But considering we're all locked down and people can't really go out, they're pretty much ordering this stuff online. Now, the pure fact that the government has, products way cheaper than the black market, considering usually a gram sells for 10 to 15 bucks black market. On the MJ store, some of them are selling for $4 to $8 depending on the premium quality. They're selling vapes for better prices than the illegal markets. I mean, you can get full vape cartridges for $40. I mean, the drinks are out. I'm very bullish around the new funnel the government has set up. Now, what stock am I interested in buying here, guys? Well, if you haven't figured it out already, I'm finding Aphria super attractive here, folks. Now, I'm not ready to dip my toes in until I see second quarter earnings to see if there is actually a real big turnaround in revenue growth. And if they do have a big turnaround in revenue growth, I honestly can foresee this $1.8 billion market cap being a fairly cheap valuation. If I'm being honest, considering the company's already doing $200 million in revenue, but considering they spent all their money already building up facilities, I need to see positive cash flow. And this company starting to achieve that. So I'm going to be keeping my eyeballs on this. Keep in mind, I already have exposure to Cron through MO, Altria Group. It's a giant. It's like if you own Constellation Brands, technically you are a shareholder in Canopy, but I don't mind having that exposure through it because there's less risk if Cron goes under, and Cron is not one of the best MJ stocks right now, but they all kind of fit in this basket of what comes next. And what we're likely to see, guys, is like every new emerging market, there's really only going to be 3 or 4 really big winners, just like Apple and Microsoft. Like there's so few that end up surviving the long term in their own individual sectors. I don't want the risk of being so exposed. And a lot of people always ask me too, well, what about HMMJ? Why not just have exposure to all of them? Which is an ETF, guys, that was actually paying a dividend, which people thought was attractive. But the only reason they were paying a 10% dividend was because they had short options against their own ETF. And whatever they made off those short calls, options, positions, whatever, they would pay out in dividend, folks. But I do not want exposure to all of these companies when most of them are just going to end up being trash. I'd rather sit here patiently, pick the winner, and just own the best, and then, you know, add it to the bank. But nonetheless, I would love to know what you guys think about all of this in that comment section below. Are you a fan of these stocks? Do you hold them? Did you pick them up at a bad time? Are you trying to ride it out? I'd love to hear all of your opinions. So stay cool, stay awesome, and I look forward to chatting to you tomorrow.